Here's 4 reasons that stocks are going to crash in December 2021 and what you could do about it. Point number 1, stocks are long overdue for a correction. We've seen indices go up and up and up ever since last year, and it's just not sustainable. We even have a bunch of folks today that keep trying to short the market because they're so confident that the market has to correct. And let's face it, in the last quarter, any company that seems to report earnings, their stock happens to plummet or go down in the after hours, even if they beat expectations. Number 2 is variant fear. So with everything going on right now with the new variants that, just keep coming out every day, seems to be a new story. So there's a lot of uncertainty as far as what kind of impact that will have on lockdowns, any kind of, vaccine mandates that might occur as a result. And finally, the overall economic impact as a result. So this will certainly serve as a negative catalyst for any downward trend we might see in the market. Number 3, fund managers are rotating out of good performing stocks. They need to show performance to their clients, and they must take profits by selling those stocks for a profit by the end of the year. To again maintain client satisfaction, they have to show that they did very well, that they're great fund managers. So as a result, we are seeing a lot of sell-off happening towards the end of the year. It's usual, it's almost every year. No surprises there. On the other side of the spectrum, you have retail investors such as myself and you, just random individual investors who might actually take advantage of tax loss harvesting. And how that works again is they have to actually sell their stocks for a loss. So any losing positions you might have, you may want to sell those for a loss so that may offset your taxes. If you have X amount of taxes you have to pay because you have a high income or whatever, you have gains, if you account for those losses, that's going to reduce your taxable income. So that's when people take advantage of what's called tax loss harvesting by selling off any losing securities, especially in the short term and especially for high income earners. Now, I do have a dedicated video for tax loss harvesting and how exactly you can take advantage of it. And also I give a few tips as far as how you can actually work around the 30-day wash sale rule. So that's very important. Be sure to check it out. And if it's not out right now, be sure to subscribe to the channel so you do see it when it comes out. So we just talked about 4 different reasons why the stock market may crash in December of 2021. Now, what can you do about it? And side note, I'm not a financial advisor. This is not meant to be financial advice. So if you are looking for financial advice, be sure to seek a professional in that specific area. With that out of the way, let's see. We just talked about how fund managers are selling off good performing stocks to realize profits, right? To get those profits, to get that client satisfaction, while at the same time, retail investors like you and I are selling losing securities if we are taking advantage of tax loss harvesting. So we're seeing a lot of selling off happening across the board, right? Everyone's selling right now, whether it's big institutions or it's a lot of retail investors who are, well versed in the finance space and they understand how tax loss harvesting works. So how can you take advantage of it? Because we're seeing all this sell-off happen towards the end of the year. So one thing you could do is, if you do have a losing position, especially a short-term losing position, consider selling that stock, especially if you don't see that stock going up anytime soon. Because what you could do is you could sell it now, you could sell it today, buy it after 30 days, and if you believe that stock is going to be either the same price it is now or it's going to be even lower, that's going to work out in your favor because you've effectively reduced your tax bill for this year, and you can buy back into it after 30 days to prevent getting hit by that 30-day wash sale rule. Secondly, one thing I absolutely recommend that you do, especially if you're a long-term investor, which I hope you are a long-term investor, is just ride the wave, right? If you do have stocks, just hold on to them, just ride the wave. If there is a dip, consider buying more. Consider dollar cost averaging in because that's going to help you in the long term, especially if you're a high income earner, and especially if these are short-term stocks, short-term positions that you've held. Why increase your taxes if you don't have to? Just hold that security long term. It's going to work out in your favor. Just my 2 cents. Again, subscribe to this channel if you do enjoy that perspective. Thank you for watching.